Hi everyone, hope you're all doing well. Today we're doing a video on Tesla. Tesla brought their earnings out last night and we're going to go through what is going on because it is very clear there is a problem at Tesla and we're going to go through what is that problem at the moment. Now, first of all, Tesla, for me, it's a stock that I am and a company that I'm actually quite bullish on normally. I think EVs are massive in the next few years, even though there's a little bit of a slowdown going on at the moment and people aren't going out there and buying EVs as much at the moment. I still think when you look at the future, mostly we're going to be dominated by EVs, obviously. And also, I think that the technology that Tesla have is far ahead of the competition, which is major. If you're out going to buying an EV car, what you're going to be looking for. You're going to be looking for example, the speed, the range. So Tesla has that massive advantage. And naturally, obviously I've owned Tesla. The first time I started buying Tesla, and you can go watch my videos when I was doing the videos about it. I first started buying Tesla in 2019. I started buying Tesla. Obviously, this is on a stock adjusted wise, but I was buying Tesla at $150 before it did its split in 2019, which would have been around this time here, around this June, May time here. And obviously, since then, the stock is up over 1,224% since that time frame. Now, obviously, I owned it, I sold it, and then through 2021, it had a bit of a dip. Thought, you know what, I can justify buying it here when you look at the sales they're having. Stock went up, made 100% on the stock, and obviously for the third time, most of you guys would have seen, I bought in this dip here, and we sold it about 2 weeks ago. So there's three separate times I've actually owned Tesla, and it's made me over a good amount of money over the last few years I've owned it. Now, I'm not normally one to get in and out of stocks that much. You guys that probably follow the channel for 3, 4, 5 years, and shout out to any of you guys that's still watching the channel after all that time. You guys would have seen that, there's plenty, something like Microsoft, for example. I've owned Microsoft now for 5, 6 years. I've held that for quite a long time. There's a lot of stocks that I'll generally hold for a long period of time. I'm a long-term investor. I do tend to hold them for a long period of time, but with Tesla, it's a little bit different. There's always that volatility around Tesla. Even though it's a 565 billion market cap, there's always the time frames where you have the stocks that run up a lot, move down a lot, and a lot of people just stare at Tesla and go, yeah, I'm holding it for the long term, But, there's clearly points when you look at Tesla and you go, it's probably undervalued here. But there's points where you look at it and you go, this is crazy overvalued. There was people that kind of jumped on the Tesla bandwagon on the YouTube seed since like 2020. And, they've been going, oh yeah, at $400, I'm holding this for the long term. It's undervalued, and Tesla's going to be, 50% of my portfolio, which is just absolutely crazy to have one stock committed to 50% of your net wealth. If something was to happen, that's 50% of your net wealth down the drain. And there's been a lot of YouTube hype that's jumped on this stock in the last, 2 years because the share price went absolutely crazy. And for me, that's where I've been covering Tesla since 2018, and I remember the times or 2019, and I remember the time back then when there wasn't many bulls out there. There wasn't many bulls on the YouTube scene making videos about it either. But now everyone's kind of jumped on the bandwagon, and for me, I'm a bit of an inverse Tesla. When people are going absolutely crazy about it, I'm like, well, it's probably overvalued now. And when people go, oh no, it's getting worse, it's going down, I'm more like, oh, okay, this might be a time to buy. But however, looking at Tesla at the moment, it's down to 7. It's just jumped as I'm recording this video. It was down 6%. It's just jumped down to 7% in pre-market down, and it's not all the way down to the levels it was in January. Obviously, it needs to go down a lot more to get to them sort of levels. But I'm generally, I saw Tesla's earnings last night, and I went, wow. Like obviously a few weeks ago, I looked at the Tesla situation, and I went, for me, I'm not happy to hold Tesla in this situation. I think the situation around Tesla and the sales and the margin could get worse. And I sold Tesla out because of it. I think having a weaker environment, an economy, and entering potentially a recession, and having a high-end car, I can't see people going out and splashing 40,000 in this environment for a new car. And it's exactly the same. Lovesac, I own Lovesac, and as much as I love the company and I think it's going to do really well, I just went, I can't hold it in this environment. I can't hold a high-end product in this environment, and I sold that one as well. And that was me just into the environment that were going on. And looking at the earnings, I'm surprised that they're not down more today. I looked at those earnings and I thought, it could get punished double digits here. And it's not happening at the moment. We'll see what happens, but I would not be surprised to see Tesla drop back down to this, $113, $120 range, which $110, $120, I can look at Tesla then and go, you know what? There's a lot more of the weaker economy priced into the stock. That will be maybe an opportunity. Like, you've got to, you might say that Tesla's going to be a great stock in 5 years, 10 years, but you got to look at the valuation. This company's trading at 50 times earnings, and you got to work out, is this current valuation worth the financials? Now, it might be worth it in 5 years' time, but for that time, you're going to have 3 years of holding dead stock when you could, go make more money. And I look at the valuation of Tesla and looking at these earnings last night now, and there's no way Tesla's $180 stock after those earnings. There's a lot of weakness going on with Tesla, and that's why I sold out the stock. And this is the big thing, like, at the moment, it's 50 times earnings, and trailing it's on a trailing basis it's 50 times earnings. On a forward basis, it's 47 times earnings. Only 6 months ago, the forward earnings was like high 20s, maybe low 30s, high 20s or low 30s. You can justify Tesla if you're offering growth. You can justify paying up a premium for this company. But you're looking at what's starting to happen with the company now. Look at analysts, for example. EPS is going to be flat. Current quarter, they were expected to do 23% year-over-year revenue growth, and they are expected to jump up to 46% next quarter, which will be impressive if they get near there. But current year, they're expected 26% revenue growth. They're expecting 28% in 2024. Now, for me, I start looking at Tesla and going, if you're growing at 20% revenue growth and your earnings aren't growing, Tesla's different from when I first invested into it now. When I first invested in Tesla, it was about getting to profitability and still growing fast. Nowadays, it's all about profitability. And if your profitability is staying flat and your revenue is 20%, I don't think you can justify paying 50 times earnings for this company. And that's one of the reasons why I sold out a couple of weeks ago. And getting on to the earnings that they just brought out last night, I looked at these earnings and I went, wow, there's a problem here. There's a problem in Tesla. Like, you look at the automotive revenues, it grew 18% year over year. This is obviously not where you want to be. Obviously, total revenues grew 24%, which is a lot better. But still, I think you need to have more growth to justify this valuation here. Now, what I will say is energy and generation and storage revenue was good. 148%. This is really good. And service and other revenue was up 44%, which I thought was very good as well. But those were the two positives. Then you get onto the other negatives. And the other negatives were, when you look at operating expenses, they were basically flat. Total gross profit, even though the revenue grew, the gross profit went down, and it went down 17%. The total gap gross margins, 977 basis points decline. You look at the income from operations, down 26%. Look at the free cash flow. The free cash flow went down 80%. Free cash flow down 80%. And this is the issue. This is what we started to see happening with Tesla. We started to see the price cuts start coming in. And we saw that to have a higher end product in this environment, the only way you're going to get revenues to grow is selling your products at cheaper levels. And that's what was happening. Tesla has been selling their product at cheaper levels to get the sales in. And this is the issue. Like, it's okay selling the cars, but if you're selling cars at cheaper, that's going to hit your gross margins. And that's what Tesla's always been famous for, is having, very good margins compared to a lot of other cars. But now they're having to sell the cars cheaper to get the sales in. The profit is getting hit. And this was clear in this statement here that it's happening. That the sales are struggling a little bit. The margins are declining, the profit is not as good, and then you compare that to the fact that it trades at 50 times earnings. You can't pay 50 times earnings for a company that's not growing its earnings and having to drop its margins because it's not having the sales in, and that's the big issue. Now, if Tesla does resolve that issue, then that is a different story, but at the moment, you're looking at the environment that we're in, we're looking at what's going to happen going forward, and at the moment, it doesn't look to get any better, and that's the issue. And at the moment, obviously, we kind of had the rumour that this was going to happen when we were looking at the price cuts, but looking at the financials this time round, it's clear to see that there is the impact starting to happen from the price cuts. They're having to sell the cars cheaper to support the revenue growth, and that's no good. When you're a company like Tesla now that's getting valued on profit and you're not growing your profit, this isn't good. And at the moment, you look at the situation, is probably not going to get any better. So once again, you're looking at going, the revenue growth is slowing. This was a company that was supposed to be growing 40-50% a year. It's slowing down to 24%. You've got a company that's not growing its profits, its margins getting hit, and it doesn't look like it's going to get probably resolved anytime soon. So you're looking at the current situation at the moment, and you're thinking, well, would you want to buy? No. And you're looking at the premium that Tesla stock's trading at, and you're thinking, I think this is going to go on a nasty slope, and it's going to go. It needs to get these impacts need to get reflected on the share price. And I was surprised not to see it even down a little bit more today, but I can't see it being attractive at the moment. And any high-end product like this that has to reduce its sell price to get the sales in, it's going to be a nasty time. So yeah, I think that overall that this was clear that Tesla at the moment does have a problem. And I think when you look at the premium that it trades at, and it's got an issue like this, I don't think it deserves to be at these sort of levels. And this is why a couple of weeks ago I sold out on my position for some good amount of profit, because I think that it could only get a little bit worse for Tesla going forward until they have the ability to raise prices because they have the demand. Unfortunately, I think this issue is going to continue for Tesla at the moment. So yeah, obviously something to keep an eye on, see what happens with the share price, but I think there could be a little bit more pain going forward for Tesla going forward. So yeah, and that's from someone that isn't a perma bear on Tesla. I'll call it how it is, and at the moment I can only see bad things at the moment going forward for Tesla. And when I see it, if I see a change around, then I'll switch and say, like, okay, I can understand Tesla being $180 today because you've got the growth, you've got the margins, you've got the profit driving up. But at the moment, I can't see it, and that is the issue at the moment with Tesla. So let me know what you think in the comment section. Is there a buy price that you would be like looking at this issue going, okay, there's an issue, but I'll be willing to buy here? Like I said, for me, I think that it would have to come back down to this sort of level that it was at the start of the year, $120, $110, and then I'll that's where I'd have a reconsidering Tesla. But that's where I would be happy to probably pick it up to justify the drop in the margins at the moment going forward. So hope you enjoyed the video anyway, guys. And as always, smash that like button and catch you in a bit.